So you found your dream home, you're pre-approved, found a gorgeous home, and your offer was accepted by the seller. Now what? What happens after you sign a contract on a house? What out-of-pocket expenses do you need to be prepared for? We'll discuss these questions and more right now.
Hey everyone, so glad you could join us today. We're a husband and wife real estate team in the Dallas and surrounding areas with the Jessica Hargis Group in Keller Williams, Dallas Preston Road. Before we get to today's topic, be sure to click that subscribe button down below so you don't miss any of our weekly videos.
You've done your shopping and you found the perfect home. Your realtor has negotiated your contract and all of the terms of the contract have been agreed by the seller and the buyer. What is next?
Well, within 3 days of the contract being accepted or executed, your realtor will turn in earnest money deposit to the title company and your termination option fee to the seller. Now the home is in option period at this point. What that means is that you have a period of days, typically 7 to 8 days, for you to order inspections and gather more information on the home and possibly negotiate repairs to be done by the seller. You're always welcome to schedule your own certified home inspector, but your realtor will often have suggestions as well.
The inspection typically costs around $200 to $300 depending on the size of the home. The inspector will go over the home with a fine-tooth comb. They'll let you know everything about the home, from cracked tiles in the kitchen to rotted trim on the exterior of the home. The inspector report may seem overwhelming when you first get it, but always remember, especially when buying an older home, that not everything in the report is crucial to be repaired before buying the home.
So your realtor is going to help guide you on this, but you'll want to make sure that the major systems and structures are definitely in good working condition. You may choose to have a few things repaired or replaced by the seller, or you may choose to complete all the repairs yourself after you move into the home.
If for some reason the inspector finds major issues with the home and the sellers do not want to fix anything, you are able to terminate the contract and only lose your termination option fee, which is typically $100 to $200. As long as you terminate within the option period, your earnest money, the 1% of the home, will be refunded to you.
After the option period is done and you've agreed upon repairs to be made, the home is moved to what we call pending status. It may seem that there's not much happening, however, there's a lot of work happening behind the scenes. The lender's going to order an appraisal, meaning they're going to have an appraiser come to the home and determine the value of the home.
Hopefully your home is worth a lot more than what you're paying for it. That means you get instant equity. If, however, the contract on the home is higher than the appraised value of the home, the lender will need you to pay the difference in cash. Sometimes your realtor is able to negotiate with the sellers to lower the contract price, but sometimes you need to make up that difference.
Yeah. So during this pending time, you're probably excitedly packing, you're getting ready to move, but always remember to stay in touch with your lender and get all of that required paperwork in quickly. Even though you were pre-approved before you signed the contract, your lender is still going to need to qualify you fully for the loan. The loan underwriters will be asking for bank statements and tax documents, and any kind of delay in these could delay closing on the home and could possibly lose the home completely.
Although it's tempting to want to go purchase new furniture and blinds for the home, don't. It's best to not make any large purchases, especially on credit, before buying your home. This can ruin the financial side of things, and the underwriters may not be able to qualify you for the home. Be smart, be very financially conservative while you're waiting to close on your home.
That is extremely important. While the lenders and underwriters are getting the financial side of things ready, the title company is working on the legal side of the sale. So they're going to make sure that the deed to the home is free and clear, meaning that there isn't anybody else who has a right to your home and land. They'll want a survey of the property, so if the seller doesn't have one already, you may need to pay for another, which typically costs $400 to $500, maybe more.
The title company will draw up all of the documents and communicate with the homeowners association to make sure that everything is legal for the sale of the home.
You will get an awesome call or an email from your lender which states you are clear to close. You'll get instructions from the title company on how much money you need to bring to closing and how to transfer it properly. It's important to be careful about wiring money to the title company. Wire fraud is a very real thing, and it's important to always call the title company and confirm any wire transfer instructions first. The last thing you want to do is accidentally transfer that money to a thief based on a fraudulent email.
Make sure you bring a valid photo ID to closing and make sure it's not expired.
Very important.
After closing and funding, you'll get the keys to your new home and you're ready to move in and make it your own.
So we hope this video helps you understand what happens after you sign a contract on a home. If you need to know what happens before you sign the contract, make sure you check out our other video entitled First Steps to Buying a Home. Of course, if you're interested in buying a home in the Dallas area, we'd love to help. Feel free to reach us at russellandjessicarealtors@gmail.com. Until then,
We'll see you next week.
have a great day.